Welcome to the podcast Selling Real Estate with Kelly Cook, where we will discuss the latest and most relevant business strategies to help you do one thing extremely well: sell more homes. We'll discuss everything from business planning to lead generation and conversion to past client customer service and everything in between. Join us for authentic conversations and nuts and bolts takeaways you can implement into your business today. And now, Selling Real Estate with Kelly Cook.
Hello, everybody, and welcome back. It's another great day, and it's another episode of Selling Real Estate with Kelly Cook. Kelly, you're doing great today, I assume. I'm not even going to ask, but we got a guest here today, so I'll go ahead and jump over that way. Moses, how are you doing today?
I am doing wonderful. I appreciate you guys having me on this show today.
Wonderful. We're glad to have you. So like I said, we got a guest. He's here with us today out of Chicago area. And this is Moses Hall. He is the CEO of, I'm going to have to pause this. So we have a guest today, and this is Moses Hall. He is the CEO over at Mo Hall Commercial and Urban Development out of Chicago. And today we're going to talk a little bit about commercial real estate. I know that we talk a lot about residential, obviously, and quite a bit about investing too. But today we want to dabble on the side of commercial and see if that's, something that I think people always kind of think about. What if I made the jump over there, right?
Mm-hmm.
Kind of thought about it. Moses is here to give you the down and dirty details about the things that you should really consider if that's something you want to look into. So Kelly, take it away and kind of tell us why we want to know about this.
Yeah, I got to admit, first of all, Elizabeth, I'm kind of a closet commercial real estate agent, right? I'm coming out of the closet now because I've always deep down inside really wondered, man, that seems kind of cool. What if, right? And I don't have any regrets at all because residential has been great to me, and I've been able to be part of some great teams and people and networks, and it's done really well. But the commercial thing is extremely interesting and intriguing. Now I know in commercial there's a lot of things different, some things the same, but you do have the ability to have a transaction in which I would say, Mo, that most of the time the buyers and sellers are maybe a little more or less emotional, more about numbers, right, and business, and that kind of not paint colors, right? Which is
right.
Yeah. So we're gonna get in that today, guys. I know some of you guys, even if you won't admit it, who are listening to this podcast, have thought about commercial before. So, I think what Moses brings to the table here, amongst other things, is the ability to kind of give a few steps in that direction. If you ever thought about it, maybe you want to dabble in it a little bit. Maybe you want to just make that jump completely because you just want to do that, or you think you do. But is the grass always greener? I don't know. But Moses is going to break it down today. So Moses, I'm excited to have you on today. As you know, we get down and dirty, quick hitters, meat and potatoes. And so I'm going to ask you a couple of questions and we'll get rocking and rolling. But I guess really quick, just give a little backdrop, if you don't mind, of how you got to be where you are today, if you don't mind.
No problem. Once again, I appreciate the opportunity to be on this show. So I started my career in real estate back in the year of 2014. I always had a goal of being in commercial real estate. So someone like your listeners, I actually started at a residential firm. I was the commercial guy, but I knew commercial was always the end goal. And I was able to build my business working with investors. A lot of the investors, they were buying like condos, they were buying like 2 units. And I was able to kind of build my business over the years with those investors, some actually out of state, some actually in different countries that were buying into the local Chicago market. And from there, I've been able to scale up where I kind of transitioned from the 2-3 unit to the 50-60 unit apartment from there. And so many like your viewers, commercial always caught my eye, but I didn't know where to start. And so my journey kind of started residential firm, and over the years built my business, took a lot of educational courses, signed up with a brokerage that also specialized with commercial eventually. And then from there, I branched out and started my own firm.
That's awesome. That's quite the career in only that's 8 years, right? So congratulations, man. That's awesome.
Thank you.
Yeah. Because I know commercial, especially you can go, I've heard stories of a year or maybe even longer sometimes without a deal, because they're bigger deals mostly, right? And and that sort of thing. But that's awesome. Okay, so if someone's considering or thought about it, right? What are some things they should know, pros and cons, before maybe making that jump to maybe into commercial real estate?
So kind of, as you mentioned, typically, depending on the type of commercial deal that you're dealing with, the deals can take a little bit longer. Sometimes you're dealing with zoning changes, village approval, all different liquor licenses, daycare licenses, all different types of things that maybe your local council, city has to approve. Sometimes they only may meet once a month or, once every 3 months. And so you have to kind of wait until they meet and approve certain things that may take a deal to take a little bit longer to close. Also, your financing. I know with residential, you may be able to kind of close a deal within 30 days. Commercial may take a little bit longer because there's a lot more moving parts on the deal, such as there's what we call an environmental inspection. So a lot of times lenders require, let's just say you're buying what used to be an old gas station, and now it's a medical office. The lender is going to send out what we call an environmentalist to what we call a phase 1 report. So they're going to look at historical records to see if there's still gas tanks underneath the soil that may be contamination and, all those different types of things. So there's a lot more moving parts than kind of with residential, where you have an accepted offer, you schedule your regular inspection, and you kind of negotiate items there. With commercial, you may have a whole environmental, and I've dealt with that, where there were potential gas tanks underneath the soil that we couldn't confirm, and now you're dealing with the EPA and all different types of stuff. So those are some of the cons that sometimes residential agents are not aware of, that your deal can take longer, and you have to be aware of some of these moving parts and nuances. But on the plus side, your checks may be a little bit bigger.
That's what everybody wants to hear.
Just a little bit.
Just a little bit. But the entry barrier to cost to get into commercial is a lot higher.
Yes.
So, with residential, you may have what we call the local MLS system, where agents may post their listings, and you'll pay a certain fee depending on your local association. With commercial, not everyone is an MLS member. So everyone's not necessarily a realtor member. You can still practice real estate without joining the Realtor Association. And so a lot of commercial practitioners may use other platforms, such as what we have, LoopNet, CoStar, Crexi, Brevitox, and these are other premium listing subscriptions that commercial practitioners pay. And they can be very costly. Typically for maybe your yearly membership for your MLS fee may be your monthly fee for some of these subscriptions to use. And so, because a lot of the data that's in your local MLS, depending on your marketplace, is not in the MLS. It's going to be in these platforms that I previously listed. So yeah, you may get a bigger commission check, but some of the costs to get in to even do business is a little bit higher as well.
So higher risk, higher reward, lower
Correct.
risk, maybe lower reward potentially, right?
Correct.
Yeah, that's interesting. So, and I also know, I think that some people think when they go to commercial, you guys have a method of doing business that is almost like, I guess, maybe a magic pill, like it's easier, right? Like, it's funny because, you're supposed to lead generate when you're in residential real estate. It's a contact sport. Well, my knowledge of commercial is that it's very similar, right?
Yeah.
You still get hung up on if you got to call business owners or investors. They hang up on you the same as a mom and pop homeowner, right?
Correct. And sometimes it might be a little bit harder to reach people in commercial because you have to know who's in command, who gives the, sometimes with commercial real estate, they they have stuff in LLCs, they have stuff in trust and corporations, and you have to kind of know who's the person to get through to make the decisions. So your research is a little bit more extensive than just looking up the, county records and seeing who owns this single family home, versus commercial. It may be a whole corporation or entity that you have to kind of get through in order to kind of cold call and reach out to those owners.
Got it. Got it. Okay. And would you suggest that if somebody's going to do commercial, that they would select maybe a niche or a discipline within the industry as opposed to kind of just go out there? Or how would you, what would you be your top, 1, 2, or 3? I won't hold you to 3 or even whatever,
Right.
but top
So
steps.
I think the easiest transition from residential to commercial is multifamily.
Mm.
It's just, you're just kind of scaling up a little bit. So if you can, if you've done a couple of 2, 3 unit deals, right? You can similarly do a 50, 100 unit deal. It's kind of the same kind of methodology, but just on a bigger scale. And they're going to be minor different nuances that you're going to look at on a larger scale that, that maybe you wouldn't look at on a 2, 3 unit. But I think sometimes for residential agents, it's a little bit easier to transition from maybe the 4 units and under, which is considered residential commercial. Residential real estate, and then commercial is 5 units or more. And so that's kind of that. And so typically most people, when they're looking to make that transition, they kind of start in the multifamily sector. Even as realtors and also investors, they kind of scale up that way. Instead of having having 10 single family homes, you'll just have 1 10-unit building.
Yeah. Okay. And then when it comes to servicing clients, right?
Yeah.
Would you say it's somewhat true that maybe it's a little harder up front to get that client because it's an investor or some sort potentially. But once you have them, as long as you have some sort of touch program to keep in touch with that person, they're going to potentially buy or sell from you over and over again. Whereas, on the residential side, you might only buy or sell a house once every 7 years or so, but you still got to keep in touch with them so they don't forget about you. Correct.
And so what I've been able to do in my business as well is, like you said, I don't have hundreds of clients. What I do is just have a very niche, select base of clients that give me business constantly. And so part of my business structure is also I work for government agencies. So I work for local government, local villages here in the Chicagoland area. So I'm responsible for selling all their assets in their county.
That's awesome. Okay, so is that kind of like a who thing, or did you have to?
Yeah, it's kind of it started off. They put out what we call a RFQ, looking for a commercial practitioner to represent them, and then you represent one, and then you kind of build a rapport, and then they hear your name, and you start representing others, and then you kind of build that, and so now you start representing the entire any commercial property that the county owns. You get to represent them. So to your point, in terms of, it's kind of once you get in, you kind of get a ton of business, and that's kind of how it is in commercial. Typically commercial investors, they're not just buying one building or one property. They're going to come to you consistently and maybe give you a portfolio of properties to sell or buy. Okay, and then from there you just kind of roll with that and build your niche, right? Within that. Okay. Right. Awesome. Correct. Okay. So let's transition real quick to the investment side of things, right? Because I know that's a hot button, and a lot of people who are residential agents have investors. They might only have a couple, right? But I think a lot of us residential agents, when we think investing, we only think residential, single family houses or 4 units or below on multifamily, right? But there's the leases are more complicated, triple net and all that stuff. But the reality is that's a good option. I think the residential agents, if they were more versed or educated themselves, even if they didn't want to play in the commercial space that much, but at least knew enough to articulate to their own client investors that, hey, commercial could be a very good investment for your money too, not just single family houses. They now open up the vast array of choices for their clients to have when it comes to investing. So my question to you is, if someone has an investor out there that maybe just currently is focusing on residential, what would you say right now might be a good asset class to invest in? And then I'm going to double this question too with, where do you kind of see the market going? Should people jump in now, wait? What are your thoughts? That's a big question, but what are your thoughts? It's a big question, but I'm gonna see if I can tackle it. But to your first part of your question, in terms of what types of assets, right now, industrial real estate is on fire right now with pandemic and people ordering online more. A lot of companies needed more warehouse spaces. Developers are loving industrial because essentially it's just open. You're just putting up four walls, and and
Cheap
then
to make. Yeah.
right.
Yeah.
So what some investors are doing, more like REIT type of bigger companies, what they do is they'll have a developer build property for like an Amazon. Amazon signs this crazy long year, 50-year lease or whatever. And then an investor, a REIT firm typically will buy it because it's Amazon and they have this long-term lease. And literally Amazon's responsible for keeping up everything on the property, and like you said, there's like triple net lease, absolute leases, where literally instead of like residential, where if a toilet breaks, now you as a landlord, you have to go down there and fix the toilet. With commercial, literally the tenant is responsible for everything. And so that's why it's important to, when you're transitioning to whether industrial or retail, to understand the leases, to understand who's responsible for what and what type of lease. If it's a gross lease, which means you'll commonly see that in office buildings where everything is included in your base rent, and then you have the opposite, what we call, like I said, triple net lease, where the tenant's responsible for the taxes, the water bill, the trash removal, literally everything. Typically, the landlord's only responsible for the common areas and the roof. And so when you say, oh, I have investors that are looking, I mean, I wouldn't mind buying a property with a Starbucks in it with a 20-year lease, a corporate guarantee, you know what I'm saying? So those are the types of perks that investors are sometimes not aware of. Like you said, when you think of just think of residential, but there are so many opportunities. So in terms of what's kind of hot right now, we see grocer anchored retail strip centers that are really hot because of the pandemic. People are looking for like pandemic proof businesses. And so grocery stores became hot, medical, like dialysis, physical therapy, those types of, investments became hot. Industrial, as I mentioned, and even still multifamily is still a good investment. And to the second part of your question, where's the market going? We really do not know. This is a very, very interesting time we are living in. And it's not like any other, like people keep thinking that it's 2008. It's really not 2008. The reason because of that is because in 2008, there was a lot of fraud going on. Nowadays, you can't defraud the system the way that you could defraud. It's kind of like, a lot of people were back in pre-2008, they were technically qualified for a $200,000 home, but somehow got a 100%, 10% loan for a $500,000 home, and didn't realize they had a balloon, payment, and it was just ridiculous back then. Now there's a lot of checks and balances. And so what my opinion is of what's kind of going on in the marketplace is that prices became a little bit too inflated, and now it's just going to cool down a little bit. I don't know about your marketplace, but in Chicago, we're starting to see that shift a little bit. Before it was 20 offers on one home. Now homes are taking a little bit longer on the market. Interest rates, like you said, interest rates at one point were like 2.3. Now they're 5.6. If you qualified for $1 million home, maybe now you only qualify for 800,000. With the new interest rates and different terms that are kind of going on. And so we're kind of seeing the same thing on the commercial end, that people are underwriting their deals just a little bit differently with the rates increasing and different things like that. But it's still holding on strong. It's still a great bet against inflation. So real estate is still a great hedge against what we're seeing in inflation. But I don't think, to your question, I don't think we're going to see a massacre like 2008. I think we're just going to see where values technically should be. It's kind of like if you bought a home in 2019 for 250,000, and then in 2020, when they dropped, the rates and interest rates were super low, then you saw homes shoot up to 300,000, and then that 300,000 set the comps for the area, and now you start seeing homes closing, for that $300,000 mark. Now I just think it's just going to cool down and kind of go back to that 250, 275 kind of.
Yeah. I couldn't agree with you more. I think, in 2007, 8, 9, you had the housing market with lending go off the rails and took the economy down with it. Whereas now, if anything, the economy will go first and take down the real estate market to an extent, right? But not take it down, but just cool it off a little bit. So it's literally the opposite, in my opinion, of what it was back then. So I could not agree with you more.
Yeah. Right. So I just think it's just going to cool down. I think a lot of people still have equity in their homes, depending on what they purchase. And so we're not going to see too many short sales. I know sometimes people did do deferment payments on their mortgage during the pandemic, so that may catch a few people up. But if you're having a hard time to maintain your home with mortgage payments, you would be better off just selling it. And you still have some equity where, unless you bought in 2020, 21, then you may be a little bit upside down. But if you bought prior to then, before the market shot up like crazy, you should still have some equity. So we shouldn't see a massacre of foreclosures and short sales like we did 2007, 8-ish. So to answer your question, the market is going to cool down. Obviously, there's going to be a lot of policies in place that will dictate what else happens. I know 1031 exchange, which is a tax method that investors use. I know that's kind of been on the chopping block, but if nothing major like that,
I hope not. Oof.
That would really kill us. So it really, at this point, where our economy will go will be dictated by the policies that our government implement.
Yeah, no, definitely. And that's always time tested and true, right? No matter how far you go back in time with this country. So definitely that'll be part of it. So sell me on this. So right now you have, not me, but the viewership. So somebody out there has an investor that, maybe owns a single family house, and they're looking to do something more, and if they're going to sell in 1031, because that's a nice transition there, 1031, they have this money. Why would they potentially consider buying some sort of commercial as opposed to maybe buying a larger or two, maybe single family homes with that money?
So a few things. Here in the Chicago market, we have a large investor base of California investors and New York investors that invest into the Chicago market. And one of the reasons being is that, obviously the cost of living is a lot higher out there and the entry point is a lot higher. And so what they are typically doing is they are selling their properties, in California, and they're taking their proceeds, and it might only been a 2-unit in Cali, and they're taking their proceeds and investing it in the kind of Midwest Chicago market, and they're buying like a Family Dollar or a general dollar store or something like that. Why? Because one, maybe they were only cash flowing. I'm just throwing out random numbers.
Yeah.
Let's say they were only cash flowing, $5,000 a month owning this one piece of property. Now they take that money and invest it into a commercial asset, and now they may be cash flowing $15,000 a month with a 20-year lease, and they literally don't have to do anything because the tenant is going to maintain that responsibility. And so, to your point of why is it better to kind of invest, in a sense, depending on your strategy, in commercial real estate than holding one home? Like you said, you don't want to have 10 single family homes and have to kind of run to 10 different properties, all that stuff. But what if you can get all, like you said, your tenants in one place, and you only have to deal with one boiler or one AC unit and one roof, and one thing. And with single family homes, if you have one vacancy, you have 100% vacancy.
Yeah.
If you own an apartment building, you have one vacancy, it's not going to make or break your profit margin.
Yeah, that's a good point. I think there's a lot of points there to consider for someone out there who might be an investor, right? Who never has done commercial. So I love that. Okay, last question for you. What's one takeaway, one piece of item that someone could take away from this podcast, Moses, and say, and it's maybe small enough to an extent to be able to implement in their business in the next week or so?
Start educating yourself on commercial. That's the biggest thing. I know a lot of residential agents get excited and, maybe they got a referral for a commercial deal and they want to jump right into it, but you're going to do yourself a disservice by not knowing what you're doing. Because like I said, there's a lot of moving parts and a lot of nuances that if you're not understanding of, it can really cost your clients thousands, if not millions of dollars, depending on the deal size. And so what is the first thing to do? I would say, one, partner with an experienced commercial person, whether it's at your brokerage, get a mentor, definitely shadow someone that's already doing it if you truly have an interest in doing commercial. And now, if you don't have an interest in commercial, refer it out. It's okay. You can still get a piece of the commission. Refer it out. Or like I said, you can either shadow someone or partner. And that's what I've been doing too. A lot of residential agents where they may have a relationship with a particular investor and they don't want to solely hand it off. We'll come together and partner and we'll co-list a property together. And I'm pretty much kind of guiding them and we kind of work out an agreement from there. So the biggest thing that I want to share with people is get educated, join different trade associations outside of your local realtor. We have what's called ULI, Urban Land Institute.
Yeah, I've heard that.
We have ICSC, so that's for the international shopping centers across the world. So every shopping mall, all the developers, owners, brokers, everyone is a part of this trade association. So I recommend kind of getting involved in that. And we also have CCIM. I would recommend if you have any interest in getting into commercial, they have what they call a Foundations of Commercial Real Estate. It's a very intro beginner course into commercial real estate. I would recommend you to explore that and to see if you really immerse yourself in commercial.
Okay, so if someone wants you to mentor them or just to refer a deal to you in the Chicagoland area, where can they reach you?
You can reach me on all social media platforms, LinkedIn, Facebook, Instagram at Moses Hall, MOSESHALL.
Awesome. Elizabeth, beat that.
I can't beat that. That was amazing. I mean, that told me everything I need to know about commercial real estate. And it sounds like I need to change careers. So, but on a serious note, we wanted to give you guys kind of the down and dirty on what that looks like to make that transition from residential to commercial. And I think Moses did a really good job of kind of laying that out, what the first steps are, the pros and cons. Kind of the multifamily transition there is probably the easiest way to get in. It sounds like that's exactly what he did to get where he's at now. So probably a good place to start. But before you even get there, start educating yourself, just like you said. So thank you so much, Moses, for being on. That was amazing. So educational for us. Thank you.
Thank you.
Yeah. And before we wrap this up, as always, please go to buildyourrealestateteam.com and you can get Kelly's fully written out plan, modules, lessons on how to build your own real estate team if that's an area that you'd like to get into as well. Look at us here. We're always giving you ways to grow whichever your ambitions are. We can help you out and give you action steps there.
That's right. So, give.
Yes, we will see you guys next week with another great opportunity for you or just some great tidbits about how to get better at what you're currently doing. And we will see you next week. See you, Kelly.
Right.
Bye, Moses. Thank you.
See you, Moses. See you, Elizabeth.
Welcome to the podcast Selling Real Estate with Kelly Cook, where we will discuss the latest and most relevant business strategies to help you do one thing extremely well: sell more homes. We'll discuss everything from business planning to lead generation and conversion to past client customer service and everything in between. Join us for authentic conversations and nuts and bolts takeaways you can implement into your business today. And now, Selling Real Estate with Kelly Cook.